Good morning, everyone, to Market Insights. I'm Sarah Touchstone, Landmark Titles, social media marketing strategist and educator, joined today with Scott Kiburz, ARMLS Specialist, bringing you the facts, the figures, the stats, and what is going on in our crazy market. We've gone, since we've been doing this webinar, Scott, we've gone from having a hot market to a crazy market, which is why it's so important to get on every month at 9:30 on the first Thursday and join us for Market Insights so that we can make sense on what is going on in the market. So with that being said, Scott, I'm going to toss it over to you and let's dive into this market.
Sarah, thank you. Good morning. Good morning, everybody out there. Take a minute and study this graph in terms of fast facts. And there was a text for rentals. I just want to give some really important detail about rentals as we speak. Number one, from a real estate agent trying to help a client with rentals and getting rentals through ARMLS. The Arizona Regional MLS is one of the major cities in the nation, and not all of them do. In fact, a lot of them don't allow rentals in the MLS. If you look out in the last 3.5 years, apartments.com has made it their mission to become the #1 resource of rental data and rental access in the nation. And they've done a great job, and they've spent hundreds of millions of dollars doing that. Part 2, CoStar bought apartments.com in the last 2 years, and that is a multi-billion-dollar entity, and they're looking at information. The current #2 best rental source in the nation is a product called Rental Beast. And just be on the lookout for more and more Rental Beast knowledge and access. A couple things that they promote about their company. One, if you have a client that is searching for a rental and they find a home through Rental Beast that they would like to apply for, there's the application credit check that they must go through. If that's $30, $50, whatever that fee is. Obviously, rentals are very competitive. I've heard horror stories where tenants, future tenants, spend a couple $1,000s just in the credit checks over and over again to see if they qualify. With Rental Beast, if you submit your application for a credit check, should be under $100. That application is good for 30 days on any of their properties. And that's just coming from a pure intent. Number 2, that's important to know is ARMLS. ARMLS, we calculate somewhere around 8 to 25% of all rentals go into ARMLS, Arizona Regional MLS, which is not a huge number, and it's not growing, it's actually decreasing as more and more companies can pivot, turn, move faster than ARMLS. And we are, when we say ARMLS, we're designed, the product we use, Flex MLS, is designed for real estate sales, ideally first. The other thing that's changed in the last 5 years, obviously, is the number of homes in Airbnb and VRBO. And when you go into a short-term rental, less than 30 days, the tax demand for a short-term rental that would be charged for somebody renting that property is taxed like it's a hotel. That tax is much higher, and it's a lot more work to manipulate versus a 31-day and or a 3-month, 6-month, 1-year, 5-year rental. And so all of those different factors by city are easily done in a product called Rental Beast or whatever company you're used to using and applying for. So just the summary of all that is look for alternatives in rental solutions and sources in the future. That's good to know. And then just in terms of what's happening with rentals, ladies and gentlemen, there's still demand to buy houses, pent-up demand. And with interest rates going up, it puts more pressure into people still needing to rent. Rents have gone up. And there's going to be a point of diminishing return where my rental property for a family of 3 in North Phoenix should demand X dollars. But finding somebody who, by your standards, qualifies with debt income ratio income, things like that, people are looking at like going, oh, I need to lower my rent just to find somebody who can afford the rent. There's lots of people applying, but they may not have the credit. What's the word I'm looking for? The credit worthiness, the credit amount that can meet that original minimal standard that you were searching for as an owner. All that said, there's pressure on rentals. There'll be different solutions to search for rentals. Right now, apartments.com is number one. Look for a product like Rental Beast to come into our late 2022, early 2023 product line. Sarah, let's move on and get started with fast facts that are going on out there. Here we go, ladies and gentlemen. Thanks for that little diversion. Ladies and gentlemen, we are at 11,536 homes on July 4th. This morning, we're at 11,637. That seems to be the mid 11,000s in Maricopa County that we've landed on. Ladies and gentlemen, that is an increase of about 235% from a year ago. But just 90 days ago, our inventory was so low that at 11,536, our inventory is up about 350% in the last 95 days. So that is a pivot. We're currently at 1.52 months of supply. We did get up to 1.92 right at the beginning of July. Solds are at 67 or 68.97. Absorption rate went from way over 100, sometimes 200% down to just 56%. Coming soon in Maricopa County, 844. Interest rates, we did get some interest rates, sixes, mid sixes. They came back down. They're still bouncing. So stay really close to your lending partners. One of the best things you can do as a buyer agent supporting your buyer is just have a quality lender who can help navigate the waters with this volatile interest rate, volatile bond rate, and help them get as much buying power as you can. Average sale price is $592,311. Next slide, Sarah. Let's jump into the details. Here we go. This is important to know, ladies and gentlemen. When you are a listing agent, pricing the house at market value.
Cute.
Go ahead, Sarah. You got a question?
Nope, go ahead. Sorry.
Pricing the house, the listing, round numbers, $500,000 versus $540,000. Ladies and gentlemen, getting your house priced at market, about 60% of the population will see that. If it's just 10% over say 550, only 30% see that. And if it's at 565, only 10% of the people in that corridor are going to see that home. And so in this market of the moment, pricing your house at market value is paramount. And that's the best graph I have that I think is worthy to share with a client, a buyer or a seller, to illustrate that. Sarah? Okay, so what's happened in the last 30 days? Ladies and gentlemen, look at March. We're at 4549 total actives in Arizona Regional MLS. And we're at 15,279 just 120 days later. That's a big change. Please note total single family available. In March, we had 2648 and now we have 9367. Ladies and gentlemen, we always look at single family properties as the bellwether of the market. They're the first to go up and the last to go down. Single family homes, Maricopa County. We're just under 10,000 doors. Our coming soon inventory, 76 or 766, up a little bit, but not much. That seems to find its way. When we had just 4,000 doors and we had 631 properties available coming soon, that was somewhere between 12 and 16% of our market was coming soon. At 766 versus 11,000 single family today, boy, that's not even 10%. That's closer to 7-8%. Interesting to know. Here's the number I want to point out to you. Middle of the page, ladies and gentlemen, total UCB, under contract accepting backup. In April, we peaked at 7,793. And boy, did that come off a cliff. We were at 2,258 on July 1st. That's down 60, 70, 75%, ladies and gentlemen. What that is, that was a tool where I'm going to buy Sarah's house. And to do that, I need to sell my house to qualify to buy Sarah's home. And in the market of the moment, welcome that, right? It gave Sarah time to go find her next home. And Sarah would review my offer with her buyer or her listing agent and say, oh my God, Scott's house is in a very hot market. It's going to sell over a weekend. Because of that, we can almost guarantee that's going to close, and we'll then go find our next house. Ladies and gentlemen, that strategy is way down, way down compared to its peak at 7,793. Total sold, we're down a little bit, but also you got to know, ladies and gentlemen, that's a seasonality thing as well. I've heard from various people, it's quote crickets, or we're having to lay off lenders. We're thinking about letting go a couple title people, whatever the circumstance. Part of that is seasonality. Part of that truly is seasonality. And the bellwether, if you look at the very single bottom line, total single family Maricopa County sold month by month. Hey, we're only down about 400 or 500 doors from our normal peak. That's pretty darn strong. Sarah? Okay, so this is July 1st, 11,210. What I want to point out on this slide, ladies and gentlemen, if you look at the red and blue lines, bottom left quadrant, that's showing sale to list price, and that illustrates over 100% of the list price that was the median and sale price, and that was starting to come down. And today, ladies and gentlemen, the average sale price is now technically below the 100% mark as of this morning, Sarah? Okay, ladies and gentlemen, this slide, Sarah, we're going to go backwards and forwards on these next two slides. I want to make this a teaching moment for everybody out there. In ARMLS, in Rapid Stats, I can go back in time. So let's look hard at the top line of graphs of active, in the center is sold, and the far right is under contract. And I put a green arrow on today. So this was July 1st. There was 11,210 actives on the 1st, sold 6,417. I didn't change that for going back 1 year. So we have 3 graphs on this slide and 3 more on the next slide of looking at this same piece of data. So what I want to illustrate to you is this. Looking at listing count under contract, top far right, 7,029. On the 1st, we had 7,000 homes under contract with 11,000 actives. Go down to the middle line, we had 7,070 actives with 7,700 under contract. The month before, 60 days, we had only 4,971, and we had 8,116 under contract. Ladies and gentlemen, we were getting the business done with very low inventory, and that greatly illustrates our absorption rate being well over 100%. We're selling everything in this month and half the next month and getting the business done. Next slide, Sarah. This is now going back 90 days. 90 days, we had under 4,000 doors available, and we were still under contract at 8,244. A year or half year ago, 4,120, we had 6,859. And a full year ago, July 1st, we had 4,282 with 8,417 under contract. Now, the sold graphic down the center, if I went back 30 days, 60 days, 90 days, it actually doesn't tell me that strike point in time. It aggregates all the sold units all the way to current day. And so that number is going to be, I don't know, 89,000 or something like that. It's a big number, and it wouldn't mean as much as I'm just trying to compare the market of the moment with what was the inventory to choose from by month and how many do we have under contract. And I thought this was a great illustration. Sarah, if you'll go back to the previous slide for me, the other way. So now all of a sudden we have 11,210, and we're not that far off with under contract. We really aren't. We've gone over 1 month supply. We're currently at 1.52 months. We also, our absorption rate came way down to 56%. We also had, in the first time in 122 months, a price reduction in home prices in Maricopa County for the first time in over 10 years. So we've clearly, the sine wave up, down, what it goes up must come down. We definitely have plateaued and we're on a slight downturn. And you're saying, well, what does that mean dollars per square foot? What are we down so far? Well, compared to this time last month, we're down $8 per square foot of a home, all homes in Maricopa County, for the median sale price, or I'm sorry, for the average sale price, and we're down $6.50 for the median sale price. So that's just information I want everybody to know. Have we turned? Yes. Is it because of interest rates? A lot to do with that. But ladies and gentlemen, we have a lot happening in our economy. We have a lot happening in our political environment. We have more and more happening with technology and our environment. This is a slower time of year right now in June, going early July. Ladies and gentlemen, if you looked hard at the trends, we sometimes see a quick uptick next week where people are back from 4th of July holiday. There's a quick buying spree the second week going into the third week in July, maybe even the last week in July. Then there's a little bit of a small downturn the beginning of August as people take their last vacation to get out of the heat, and then school starting for their kids. There's a focus there on family. And then come mid-September, when things are back into that next group, we take off slightly again into the finish of the year. Sarah, keep going for me. Next slide. Here we go. Here's some simple math. I want everybody to understand that just a few months ago, we had 4,000 active listings in 153 zip codes in Maricopa County, which averaged 26 listings per zip code. Today, we're just under 12,000 in those same 153 zip codes. That's 78 doors average per zip code. It's not a huge number at all. And it is providing choice for buyers. They are able to ask for a home inspection. That might be 10 days. They're able to ask for some repairs. Another thing that becomes very effective for your buyer, all the buyer agents out there, is maybe you don't negotiate hard on price or lowball a buyer or a seller. Maybe you come in and ask for a seller contribution to be used for closing costs and other prepaids, and help buy down the interest rate for the first 12 to 18 months with anticipation that interest rates will come off its peak that was somewhere around mid sixes. It's already in the high fives as we speak. That becomes 1.5 points cost to the seller versus discounting the home $20,000, $50,000, $60,000 on the door itself. Sarah? To illustrate that, ladies and gentlemen, the 26 homes versus 70 some homes, if we just use the round number 9, if we had 3 homes in the market, 3 homes in no man's land, and 3 homes out of the market, meaning 9, a lot of times when the market was just 3,000 or 4,000 active listings, and I am priced the number 4 most expensive home in that zip code, the 3 homes in the market sold in a weekend with multiple offers on Tuesday, making my home the least expensive home the next week. And the homes out of the market, I'll be in the market, even though I'm 5, 10, 20% over, I'll be in the market in another 2 to 3 weeks. That seemed to ring true for a long time in our marketplace. As prices have gone down, to use the same number of 9, those 3 homes still sell in a weekend. Those middle homes don't sell. And they're like, well, I should be the lowest price home. Well, I've raised the number of homes coming into the listing market. They're coming in at the same listing rate as what just sold. So those are getting picked off right away. Again, and your homes that are 5% over just get lost in no man's land. You're thinking, what am I doing wrong? You could be off by less than 1%, 5% home cost and just never sell. Then there's obviously the ones that are just way overpriced. They're just out of the market. Trying to illustrate that with this graph. Sarah? Here we go into Maricopa County, just big pictures. Hover over all of Maricopa County in a helicopter. Our active listings are up 161%. They were 4282 a year ago, and they're 11210 this time this year. Sold are down 28% from where they were a year ago. Median sale price, ladies and gentlemen, just go back a year. We're still over 21% higher than we were a year ago. Not a year ago, January, a year ago this month. Our supply is up 265%, and that's from a year ago, but it's up 350% in the last 95 days. Days on market are still very low at 22 versus 18. If you've got a home that's now sitting 30 days on the market, ladies and gentlemen, that is the market speaking to you. Your seller and you working together as a listing agent are overpriced. Sarah? Here we are, July 4th. I just wanted to give even a greater look at the red and blue line, bottom left quadrant. This is illustrating where the average sale price there has already dipped below 100% of list price. And that's the actual numbers. Median sale price 283, average sale price 302 for July of this year. Sarah? This is the back end numbers of what that looks like. On this graph, top left, active listings 1155. Go right below the word active listings and look just a month ago, our listings are up 57% higher than just a month ago, 209% 3 months ago. Go back 6 months, only 168. This is for all of Arizona Regional MLS. For the longest time, ladies and gentlemen, those who are working with buyers who are doing fix and flips, just 6 months ago, the average number of homes flipped in any one metro was 20%. We hit about 16, 17%. Right now, we've dipped below 9.4% fix and flip for all Maricopa County. And then if you look at the bottom green arrow in the gray, month of supply sold list by price range, you're seeing, even if you hover over 200 to 300,000 and look at MOS, that's month of supply, 1.15 months. STL stands for sale to list price. That is the illustration of under 100% on average. So that is part of our dip. Wanted everybody to see that and be able to share that with their buyer and their seller. Sarah? This graph here, I'm a fan of. So the green bar represents the listing count. Look at how huge on the far right, June of 2022 is. We were over 10,000 doors, almost 12,000 doors already this month. That is a significant increase. The black and the orange line for average dollar per square foot, you see average dollar square foot has peaked and it's trended down. The median sale price is right at 100%, just in holding. Sarah? This is looking at what's under contract. So the number of homes under contract currently are right at 7,000, down from 8,000 or even just under 9,000 120 days ago. But I want you to see visually that is illustrating the average dollar per square foot, median dollar per square foot trending down. And that's our illustration of prices decreasing in our marketplace. First time in 120 plus months. Sarah? Cumulative days on market. This little hook at the very far right of the graph, we've gone from 18 to 22, but that's what it looks like in a graph form. It is days on market are up slightly. Sarah? Sold to list price. This is illustrating in a linear graph too, getting back to the 100%, and what they're showing, bottom gray sale to final price, they're averaging 100.59. Sale to original 99.93. Sarah? I included this graph here just because of the left side of things, the absorption rate. And if you look at June of 2020, when our absorption rate went over 100%, boy, was that a shock to me. And we actually, you can see in this graph, we did go over 250, we approached 273% in our our peak black line there. That has now dipped down to 56%. In the month of supply, did go as high as 1.92. Currently is hovering at 1.52 market. And where you see where the black and the green blue line cross, that happened in essentially 60 days or less. Sarah? What I want to illustrate here is to the far right month of supply. Go to 2021 December, we had 0.57 months of supply. Go to June of 2022, we're at 1.92 effective essentially July 1. Sarah? Ladies and gentlemen, this is a number of canceled listings. So we're always looking to see if our market is still in a good, healthy place or something dramatic happening. So we have had less than 1,000 canceled listings per month in Maricopa County for a couple years now. We did get over 1,277 in the month of June. If that number had gone from 852 in May to 2,500, 3,000, 7,000 canceled listings in 1 month, that would be a signal of something more tragic happening in our marketplace. There's a slight increase in terms of, let's just call it 350 doors, give or take. That is a warning light. We're going to watch that to make sure it doesn't go to 2,000 or 3,000 coming up. Just know that we watch that for the benefit of, go ahead.
Oh, we did have a question. Speaking of the previous slide, it looks like we're moving back to the same market as 2019 or similar.
Boy, you could say that numerically, and respect to the audience and the audience member. When we didn't have the Luke Air Force Base expanding 100 jets. We didn't have a multi-billion-dollar Taiwanese plant coming to North Phoenix and a multi-billion-dollar plant for Intel coming to the Southeast Valley. We didn't have 11 new Amazon warehouses, and one of them being a super warehouse in Goodyear at just under 1 million square feet. Our marketplace, our local economy, our infrastructure is sound. If there's been a red flag that's come to our market, probably has been water. And the governor committed $1 billion in the last legislative session to look at how we move water within our state. Is $1 billion going to get it done? From what I've been hearing, probably not. But boy, is it a major signal that we are going to figure out water management in the state of Arizona. So you could say numerically, we're similar to where we were in 2019. That would be a true statement. But when you look at our political environment, Roe versus Wade, look at all these other things, we're in a completely different market than there. And the influencers say, boy, if I need to park money in real estate and be safe, I'll park it in US real estate. And if I'm going to park it in US real estate, what's one of the top 3 cities to do that in? Phoenix, Arizona.
Nice.
Sarah? Hope that helped. Sarah, as we wind down, I'm always trying to be respectful of the clock. There's a couple more slides I want to get to that are important. Go ahead. Okay, under contract. So June, we did go down to 87.95. Part of that is seasonality in June. When you look at the whole graph there, you see December 2020 at 91.35, and you see December 21 at 84.87. That is symbolic. That is a trend. We always see a little bit of dip in June and July, but we've had a little bit bigger dip. And because of all the things we just shared, especially interest rates and inflation. Sarah? Here we go with closed listings. So we did have a few less closings, almost 1,000 doors less than where we normally have been. We'll keep our eyes close on that. Sarah? Here we go. This is just the number of listings coming into the market. So June was the biggest number we've had in over 2 years at 12,577, meaning more people are like, let's get on the market, let's get this sold. There is energy to list and sell my home for whatever reason. The market is growing. More people are putting their house on the market. Sarah? Here we go with our trend. And again, Sarah, out of respect for time and everybody here, this again goes from Apache Junction. I want to say there's 1822 homes or cities going out to Tonopah, and people can study these individually. But our active listings are up. Our median sale price is still running in the mid-20s overall. Days on market are starting to shift a little bit. But if you need to know what's happening out there, and I see this request for Scottsdale, we'll slow down at Scottsdale, Sarah. There's Paradise Valley still up at a great number. Phoenix is still up. Rio Verde, Santan, Scottsdale, there it is. So Scottsdale's up 100%. Sold listings are down 35%. Median sale price, 27% of where it has been at 425. Ladies and gentlemen, and that's a big pull because Scottsdale, you know, of all the metros, is an affluent city. I just saw the pop-up for Cave Creek that is back further in our initial letter C. These are alphabetized, so just have the list set. Well, go ahead, Sarah, we're almost there. We'll grab Cave
And
Creek.
as a reminder to everyone that our entire slide presentation is available after our webinar. All you have to do is just reach out to your business development manager and they can send it over to you. If you don't already work with one of our business development managers, please let me know. I will get you in touch with them, but all these slides are available.
So there you go. There's active listings up 120%, median sale price 360. It's up 24, just under 25% for the year. And the median days on market are actually going down. And so when you look at Paradise Valley, Scottsdale, that becomes a lower cost option to Cave Creek to get there. And then the other thing about Cave Creek is that's even quieter and more remote, more second home type of environment. So Sarah, it's always a pleasure to provide this information to you and your team and the agents who watch. There's been a lot of movement. There's a lot of other influences happening in our marketplace. In addition to just the numbers, the why, I hope we got a little bit of touch on that. It's always a pleasure to be doing business with Landmark and the quality work that you guys do. And I appreciate you. So have a great day out there, everybody. And thanks for listening in.
Thank you, Scott. As always, amazing to have you on. This is an exciting time for us. You know, I know a lot of people are getting nervous, but I hear constantly from top producers, team leaders, that this shift is exciting. They are enjoying it. So a lot of, you know, this business is about knowledge and mindset. So we appreciate getting both of those on here today from you. As always, like I said, if you would like a copy of this recording, if you would like a copy of these slides, please reach out to your business development managers and we will get them to you. And then we'll see you next month. Can't wait to see what it looks like next month.
Happy day out there, everybody. Thank you again, Sarah. Have a good day.